Most Australians who lose money trading don't lose it because the market is rigged. They don't lose it because they picked the wrong stock. And they don't lose it because some big fund in New York outsmarted them. They lose it because nobody ever sat them down and walked them through the basics. The 5 things coming up in this video are the ones that make the biggest difference between traders who grow their money over time and traders who give it all back. Let's start with something that catches almost every new trader off guard. When you buy shares in Australia, there are 2 very different ways your ownership can be recorded. The first way is called CHESS sponsorship. CHESS stands for Clearinghouse Electronic Sub-Register System. All it means is that your shares are registered in your own name with the ASX. You get a special number called a HIN. That's short for Holder Identification Number. If your broker ever ran into trouble, your shares are still yours. Nobody can touch them. The second way is called custodial holding. That's when the broker holds the shares for you, all mixed in with everyone else's shares. It's cheaper, it's faster, it's how a lot of the newer app-based platforms work. The trade-off is protection. If a custodial broker ever failed, you'd have to line up with everyone else the broker owes money to. Most people get their shares back, but it can take time. If you've been watching the news, you'll know the ASX is in the middle of upgrading the old CHESS system. Release 1 is rolling out through 2026. The good news for everyday investors is that your HIN and your protections stay exactly the same. Now, whether you're learning about CHESS sponsorship or exploring how markets move day to day, having the right tools matters. That's where today's sponsor Mitrade comes in. Mitrade is an award-winning ASIC-regulated CFD platform founded in Melbourne, giving you access to over 1,100 instruments. They've just launched a GPT-powered feature that summarizes market trends and news from the past 24 hours, so you can stay across what's moving and why. And for Aussie users, you can start with as little as $20, which makes it one of the lowest entry points for any trading platform in Australia. Links in the description and pinned in the comments. Thanks again to Mitrade for sponsoring today's video. Right, let's get back to it. The second thing to understand is how brokerage and hidden costs really work. The number you see on the screen is often just part of the story. You'll see platforms shouting about zero brokerage on ASX trades. That's genuinely great for a lot of investors, but it helps to know how those platforms make their money, so you can pick the right one for how you trade. Some of them widen the spread. The spread is just the gap between the buy price and the sell price. Some charge a currency fee of about 0.6 to 0.7% every time you buy a US stock. Then they charge it again when you sell. Some make money by passing your trade to another company that pays them for it. None of this is hidden. It's all written in the fine print. Most people just never read it. Over the course of a year, those small percentages can add up. A trade that costs you nothing in brokerage might still cost you 1.5% once you add up the spread and the currency fee. So before you sign up to any platform, read the fees twice. Ask how they make money if the trades are free. There's always an answer. And once you understand it, you can pick the right platform for the way you plan to invest. Now let's talk about tax. Every time you sell a share for more than you paid, that's called a capital gain. The Australian Tax Office wants to know about it. Right now, if you've held the share for more than 12 months, you get a 50% CGT discount. That just means only half of your profit gets added to your taxable income. Hold it for less than 12 months and the whole gain gets taxed at your normal rate. Here's the part to pay attention to. The government has put a new tax bill into Parliament. From the 1st of July 2027, the current 50% CGT discount is set to change. Instead of cutting your gain in half, the tax office will use inflation to work out how much of your profit is real, and people with very big gains will have to pay at least 30% tax on them, no matter what. In plain English, the tax break for holding shares long-term is being reshaped. Higher earners with big profits will face a floor they can't drop below. The details are still moving through Parliament, but the direction is clear. Holding for the long term is going to matter more than ever. Short-term trading is going to be taxed a little heavier than it used to be. That's not the end of the world. It just means planning ahead pays off more than it used to. Dividends come with their own twist too. It's called franking credits. Franking credits can actually cut your tax bill when you invest in Aussie companies that have already paid tax on their profits. For most everyday investors, franking credits are staying exactly as they are. It's worth taking the time to understand this, or at least sitting down with a good accountant once a year. The fourth thing every Aussie should know before trading is that leverage is a serious tool and it needs to be treated like one. Leverage is when you borrow money to make your trades bigger. It's usually offered through products called CFDs. CFD stands for contract for difference. Used well, leverage can help experienced traders make more from a move in the market. Used carelessly, it can move against you just as fast. ASIC is the regulator here in Australia, and they've put sensible limits in place to protect everyday clients. The cap is 30 to 1 for major currency pairs. It drops as low as 2 to 1 on crypto, where prices move more. Those limits are there for a reason. ASIC's latest report showed that 68% of retail CFD clients lost money that year. Total losses across the industry topped $458 million. The same investigation led CFD providers to return nearly $40 million to more than 38,000 Aussie investors. That's a big deal. It shows the regulator is watching closely, and it also shows why choosing an ASIC-regulated platform matters so much. The takeaway isn't that leverage is off limits. Plenty of Australians trade CFDs successfully. The takeaway is to learn the tool before you use it. Start small. Use stop losses. Never risk more than a tiny slice of your account on any single trade. And stick with well-regulated platforms that give you the protections ASIC has put in place. If you're brand new to trading, it's usually a good idea to spend some time learning how markets behave with your own money first. Once you understand how prices move and how you react under pressure, you'll be in a much better position to decide whether leveraged products fit your strategy. And the fifth thing is that your mindset will shape your results long before your strategy does. Markets are built to test every emotion you have. When prices are falling, your brain tells you to sell and save what's left. When prices are rising, your brain tells you to pile in before you miss out. The Aussies who build real wealth through the market are the ones who make a plan when they're calm and stick to it when they're not. They automate their investments, so the money goes in every month without them having to think about it. They understand that a 20% drop is not a disaster. It's a normal Tuesday in a healthy market. And they know the goal is not to be right about every single trade. The goal is to still be in the game 20 years from now with a portfolio that has grown into something that changes their life. If you can manage your own reactions when everyone around you is panicking or getting greedy, you're already ahead of most people who have been trading for decades. Write down your trades. Write down why you bought and why you sold. Over time, you'll spot your own patterns. Working on those patterns is worth more than any hot tip you'll ever hear. So there you have it. Chess versus custodial. The real cost of trading. How tax actually works. How to handle leverage the smart way. And why your mindset matters more than any tip you'll ever hear. The Aussies who build real freedom through the market are not the smartest people in the room. They're the ones who understood the basics, showed up every month, and let time do the heavy lifting. That can absolutely be you. If you got value from this, do me a favor and hit the like button, subscribe to the channel and turn on notifications so you don't miss the next one. I'll see you there.